Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Last week, in the report that I put out analyzing the markets, I compared technical analysis in the financial markets to the way I actually forecast weather. And I mentioned to the audience then that I actually have some experience in weather forecasting because as a pilot, that's a very big part of the curriculum. When you're going through your courses, you have to actually know how weather patterns would affect your flight pattern. And of course, it helps you with managing risk, especially in an airplane. Little did I know that the weather report that I was forecasting showing a threat in the circulation of a particular storm front, little did I know that that would wind up being historic flood levels for Louisiana. And I talked about how even in forecasting weather, you have to plan ahead for risk to avoid any kind of catastrophic loss. And when we look at the financial markets, there are very definite signals that come across the technical charts that allow us to forecast where price action will most likely wind up in the future. And here is an example of what I'm talking about here. This is the Dow Jones Industrial Average ETF, ticker symbol DIA, and this diagonal line is what I drew on the chart showing where I thought the markets would go this week. Now again, this diagonal line was drawn before any of this price action had occurred. This is last Friday's close. This is where I drew the line, and you can see that by Wednesday we came within pennies of the low that I forecasted right there. The end of the line is where I said the market would wind up, and lo and behold, on Wednesday here, actually that low is again pennies from my forecast point. And today, Friday the 19th, we closed again relatively very close to that forecast. And I did say that this line, this horizontal line, would act as resistance, and that's exactly what has happened. So what I'm going to do is I'm going to erase these lines, and I'm going to once again forecast what I believe is going to happen next week. Now this high right here from the 15th is going to be our new resistance point. I do believe that the markets will bounce off of this blue line, which is the 50-period moving average. I think we're going to move up to fill this gap right here, and then I think we're going to start to pull back from that point. I'm not going to draw the pullback just yet because we have to wait to see what happens with volume. But the reason I think we're going to bounce is because today's low had a long shadow underneath that candle, number one, that shows that the buyers are coming in the middle of the day. And this very small, narrowed body right here is a sign of indecision. So I think that this moving average is going to act as a very minor support level. We'll see the bounce, and then we'll have to forecast after we see that bounce. So that's my forecast for the diamonds. If you look at the spiders, ticker symbol SPY, I drew similar lines. You'll see as I zoom in here, this diagonal line was what I drew from last Friday, and I said that we would reach this point, and we would have this horizontal line as our target price. And again, look at that. Wednesday, we came within a couple of pennies of that low before we bounced off of that support. And then Thursday and Friday, we moved a little bit higher with those green candles. So what's my forecast for next week? It's going to be very similar to what we saw in the diamonds, with one exception that this high from the 15th is going to be our next resistance point. So I'm going to leave that right there and then draw a diagonal line pointing in an upward direction. I think we could move up just like that and test that resistance. There's a very good chance we're going to pull back, but I'm going to leave this line in place with my target price right there at the end of that line. So keep an eye on that. That's right around 219.30. That's my mark, 219.30. Now let's look at a more broad-based index. That's the Russell 2000, ticker symbol RUT. Again, last week's forecast was pretty similar right across the board. I said this diagonal line would be my target. We came very close. We actually touched that 20-period moving average and then bounced. So I'm going to erase these lines and redraw what I think we will see for next week. This resistance high will be the test. I think we could easily see a little bit of a rally there to test that high as well, just like that. And then from there, again, I think we'll pull back, but I'm not going to get ahead into the following week. I'm just going to forecast 1 week at a time. Now, this is not any kind of a magic trick. There's no smoke and mirrors here. It's straight technical analysis and what I see for the technical signals. And it's what we teach at the Market Guys. I also look at the VIX. And last week, I don't believe I forecasted the VIX. I could be mistaken. No, there's no lines there. But I did say the week before that this horizontal red line was a 20-year support level for the VIX. And the VIX is a contrarian indicator. So I think it's going to happen here. I think the VIX is going to drop a little bit, and then the VIX will most likely start to bounce. Because the VIX is a leading indicator, it's that bounce that we have to pay very close attention to, because if the VIX starts going up, the rest of the markets, particularly the S&P, could start moving lower. So that's the leading indicator right there, and I'll leave that in place for the VIX. Next Monday, which is the 22nd, at 8 p.m., we're having an open house Q&A, and you could register for free. You just go to the Market Guys website, and on the front page, you'll see a registration link that will bring you to this page. As you can see, very simple. Just put your name and email address and the city. I always like to see where people are calling in from. We will not be sending you any kind of spam email. I give you my word on that. This is strictly so that we can send you the invitation and reserve your seat. And then also we can send you the recording. If you're not able to make it, we can send you the recording. So it's very easy to register. Name, email, city, and then click on register, and you're good to go for that event. And if you want to learn more about what we do at the Market Guys, just go to the Market Guys website, click on that video link right there, and it'll bring you to a video library. This is all free education. Absolutely, it's our gift to you. Feel free to browse through here. There's lots of different topics that you can learn about, particularly the role reversal and how that works. We talk about head and shoulders bottoms and trading the tops. It's very exciting because, as you'll see when you explore technical analysis, you'll see that these signals are extremely accurate. And once you learn how to read the signals, it absolutely puts the odds in your favor to be able to make money. But it also helps you be a better manager of risk. And that's the key, learning how to lose very little when you're wrong. And that's how you become successful in the market. So thank you so much for joining us. This is AJ Monty with the Market Guys. Again, feel free to visit our website, browse around, and hopefully we'll talk to you on Monday the 22nd at 8 p.m. Have a great weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.